But Mihir Vora joins us in the studio. Hi, Mihir. It's a rainy morning.
Yeah, rainy but a happy morning.
Yeah, that's good. And if the markets
and
are
you
making
made it here. So.
and the markets are making fresh all-time highs, and obviously portfolios are feeling good as well. But Mihir, what do you think about the headline index from here on? Before we discuss about various themes, given that we're at around 19,000, we could easily do another 5% from here. But do you think in the next, say, 12 to 18 months, or the upside on the headline index could be capped, given the valuations, given that we're getting into an election year? The Fed, I'm not sure what they're going to do next. So given all of that, do you think upside on the Nifty could be capped?
It may be capped, but it's still a healthy, outlook in the sense that the index has actually done nothing almost for 15, 18 months, right? And earnings in the meantime have grown by 15, 17%. Expectations are another 15% growth for the next couple of years. So given that we expect good earnings growth for the Nifty as a whole, and valuations are at a little above long-term averages, about 19 times on a forward basis.
Yes.
Remember in 2022, early 2022, we were trading at almost 23, 24 times on a forward basis. Now we are down to almost 19 times. So valuations have time corrected. The large indices have time corrected. Probably a little bit froth on the small cap and mid cap front, but nothing to worry about. So I would expect normal, when we say 10 to 12% kind of returns from the large cap indices.
Okay.
What are you doing, Mihir? That's what we want to know. What exactly? What is the new thing you're doing? Or are you happy sitting on what you have, what you own, and that's doing just fine?
Trying to pick stocks, obviously, that's what you need to do. But in general, the broad theme that we've discussed many times, that the domestic sector is definitely doing much better than the global. Plus the government-linked segments like infrastructure, road building, railways, defense is working. I think the big call that one needs to take is what happens in China. Whether China comes up with another big stimulus, which can potentially impact metals and global growth. But apart from that, I don't see too many risk factors to the domestic theme. The exporters like IT, etc., we're still underweight. But the way US is not going into a recession, I would say, it also may be an attractive bet at some point in time. But we would wait to see the hiring numbers and some big announcements for order wins, etc., for some of the large companies.
When one looks at blocks data and what HNIs, etc., are doing, I mean, you're an institutional investor. What one is sensing is that people are willing to go down the market cap curve to look for that extra sort of delta, extra
that's the
juice.
Frothy part of the market now.
Yeah, but so what do you make of it? I mean, is it is it going to be? And we're seeing good, credible names. I mean, in lots of these sort of smaller companies. Small caps is passé, it's micro caps now. Your sense?
So we're sticking to mid and large mostly. Small caps, we have probably about 10% exposure in some of the funds, 5 to 10%, not much. And in the blocks, probably we participate in 1 or 2 out of 10. So it's not like we're participating in everything. We're still being choosy about valuations.
But do you know why these promoters, investors are just checking out right now, selling so extensively? Is it just opportunistic? And then shouldn't it make investors wary, right? That they don't have the confidence to stay put at these levels.
See, some of them are known exits because a lot of the PE and VC funds which invested 3 to 7 years ago,
they have a shelf life.
They have a shelf life. They have to exit. And for most of the consumer tech, the ones that got listed about a year and a half ago, we knew that these blocks are going to come after 1.5 years. So that's not a surprise. Yeah. Promoter selling is there, but I don't think it's at an alarming or extraordinary level. So I think at some level, promoters will want to buy a bungalow in Newtons or something like that.
All right. Mihir, on the positive front, we'll say the depth of the market as well has improved, right? The kind of selling that we're seeing is getting absorbed. I mean, I think your phone must be buzzing non-stop with the kind of large trades we're seeing, and a lot of them taking place even in the pre-market, which is safer. Yeah. There's no scope of slippage. I wanted to ask you about this power theme. It's come back, and it's come back in style. You could play it various ways. The Genco's overdues have come down, so you could play the financiers, you could play smart meters, you could play renewable. How are you all approaching this space? Because there's a lot of excitement out there and various themes to play it as well.
So we're still playing it mostly to gensets. The thermal theme is used to be the big theme. That's no longer a theme. And in the renewable space, frankly, there are very few listed companies that one can participate in. So the big action is happening in solar. Very few companies which are, direct exposure or indirect exposure to solar. Yeah. And probably even if they are there, probably they have some of them have debt issues and, legacy issues. Yeah. So apart from utilities, there are very few plays, frankly, in the power space because thermal is still not a big theme.
Thermal is not a big theme. Financials, Mihir, especially NBFCs, how much exposure do you have there? Are you increasing exposure to the NBFC space?
Yes, significantly more than what we used to have, say, 6 months ago. Especially, in the private sector NBFCs, of course, not so much in the public sector or.
And which, what kind of housing finance or is it?
Across the board, what we are seeing is that essentially retail lending continues to gain traction. There are still any alarming signs of NPAs building up in those pockets, and margins happen to be some of the best, especially in the low affordable housing and those kind of segments, whether you talk about gold, affordable housing, even unsecured credit if done the right way. Some of the fintechs are now actually plays on retail lending. So those kind of themes are still building up. I think there is a bit of a penetration story here, and the trigger for us to increase exposure to NBFCs was basically the drop in funding cost, or at least the worst of the tightening behind us.
Is it a call on scale? Because, I mean, say, for example, for an HDFC Bank to go from, 15-20 lakh crores to 40 lakh crore book is going to be harder as compared to Bajaj Finance to go from 4-5 lakhs to 10 lakhs. I mean, is that the call, or is it purely tactical rates coming off so NBFCs benefit more?
I think it's more. I think we have given up trying to predict the end of the growth for the larger banks, because I think some of the banks have continued to grow.
Because even a year back, the call was why go down the curve, because large banks are available at decent valuations.
Correct. But then the valuation differential became quite sharp because private sector banks did quite well and NBFCs were almost available at one-time book. Even the private sector NBFCs were available at one-time book. So there was a bit of a valuation catch-up in any case, and plus the funding cost trigger.
By the way, HDFC AMC is now up 10% right now. So it's getting very close to its 52-week high. I think the 52-week high on HDFC AMC is 2,314, hit on 20th of December of last year. And the stock currently is at 2250, so about 65 points away, 3% away on HDFC AMC. Look at that move on the stock. Do you think the regulatory overhang on the AMC companies may now be behind, given what the developments over the last 2 days, that even if we get the second TER, a new proposal based on the second proposal that comes through, it's not going to be as stringent as what the market was fearing? So do you think the worst of the regulatory headwind from AMCs is behind and stocks are attractive?
Hopefully, because the...
But you're not convinced, you're saying hopefully.
Hopefully, because regulatory, we need to wait for the final draft in any case. But valuations in this space had been beaten down. Some of the other capital market linked stories were also beaten down. For example, some of the brokerages, AMCs, they're all trading at much cheaper valuations than what they used to trade about a year and a half ago. So there is a bit of a value play too here.
So you would buy right now? Would you recommend adding on to positions, buying?
Yeah, in the sense, if it's a value buy, why not? Yeah.
What about how you're approaching this financialization themes? AMCs we discussed. There are exchanges out there. BSE suddenly it appears it's coming back into the limelight. After a while, doing the right things, getting some bit of regulatory support as well. You have MCX that unfortunately they have promised, but they have not been able to deliver, and that's been a big negative because the street was factoring that. And you have the unlisted NSE.
You have depositories too.
Depositories as well. So yeah, so how would you play this financialization of savings or the stock markets as well? How do you play it?
That's a theme that has to secularly grow, frankly speaking. And you can pick and choose whether you want to be in an AMC or a brokerage or a depository. It? We have some exposure, not very high. So far, most of the, because as an insurance company, there are limitations on sector exposure. So banking itself and NBFC itself becomes so big that to add other financials becomes a bit of a sectoral constraint.
Correct.
What else, Mihir? I mean, any smaller sector where you think, it's still, lesser valued than it should be, where there is opportunity? In the mid-cap and large-cap space where you're comfortable.
Sure. So construction capital goods continue to surprise on the upside.
I heard you say construction, but are you talking about road contractors or?
No, even buildings. The private sector, capex in buildings, real estate. When I talk about buildings, I talk about office complexes as well as industrial buildings, hotels, hospitals is a big space. A lot of action happening from the government side in hospitals. If you look at some of the companies, they've got huge, because government has announced a lot of aims, etc. And a lot of work is happening in buildings. So I would say roads, buildings, infrastructure, that's one. And
And they stick with because there are lots. I mean, that space is as
it's all mid caps. It's all mid and small caps.
Okay.
So you have to really pick and choose there.
So without naming names, I'll name names. I mean, there's KNR and there is it's a long line of companies. You talking about those kind of companies,
so if you look at the quality so far filter, in our list there are probably 3 or 4, frankly, which pass the quality test. I would say.
Okay.
And then the surprising part or the positive surprise over the last few quarters has been you don't see big bang project announcements. There's no major steel plant announced or fertilizer plant announced. But still, private sector capex is picking up, which means it's the small units which are setting up capacities across sectors, whether it's pharma or electronics or textiles,
ethanol, sugar,
a lot of things happening in the MSME segment, which is adding up to all this capital expenditure. So cap goods also, I think, continues to surprise on the positive side.
We had the management of Thermax joining us, exactly making the point that you're making. That's the it's not lumpy.
It's
smaller
not lumpy,
orders, but which also makes it much more sustainable. Hopefully,
absolutely.
By the way, NBFCs are on fire today. Indiabulls Housing Finance 4.3% up, M&M Financial 4% up, Manappuram, Max Financial go down the curve as well. You're seeing some big moves in very large volumes. On the losing side, Tata Communication has trimmed some of its losses. It was down close to about 5%, is now down, I think, 1.7%. Pull up Tata Communication as well. Revenue boost, but there will be some slip coming through on the margin front. Mihir, what about pharmaceutical? There was a lot of interest in pharma when the index was close to its 52-week low. It had started rebounding. In fact, it was the first sector to lead the rally. But now, again, in the last 1 month, we're not hearing too many people coming out and say, buy now, buy now. Where do you stand on pharma and the individual subsectors in that?
So valuations are attractive.
Still.
The call on pharma, I think, will be whether generic pricing pressure in the US has bottomed out. And if that happens, then there can be a big re-rating of the sector. I guess why pharma is probably not in the limelight over the last few weeks is because there's so much action happening elsewhere.
you may want to. Thank you very much for joining us, but.